Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst here, Curtis Scout, and jumping into the charts on this August 9th. So, awaiting the mega economic data release tomorrow, the CPI, markets are expecting a lower number, but there's a couple things we need to dissect here and really pay attention to. First off, today on the S&P 500 daily chart, the volume was one of the lightest volume days of the year. It was anemic, extremely light. And the fact that it was so light, one of the lightest volume days of the year, and we still managed to close down on the day, is not really a good positive sign in the short term. Typically, light volume periods, especially when they're the lightest of the year, favor upside. And what does that mean? That means that we really didn't see much retail buying, which typically occurs at the end of extension moves, and we really didn't see any institutional buying as well. So when you have buyers on both ends lacking, and you start to see the price wane on such light volume, it definitely means that if any sort of news catalyst hits this market, these markets could see a sharp drop or reversal. Now, obviously, that reversal could hold true for the positive in the sense that if we get a better than expected CPI number, then we can start to rally tomorrow. But honestly, we have to really monitor what type of rally is it, how much volume causes that rally. But I do think that CPI number is going to affect the markets one way or another. I'm in the camp, my bias is towards the downside as we are net short still. But overall, looking at this intraday action, here's your pre-market trading. A little bit of a sell-off, rally up, a little bit of a nasty reversal candle, followed by some harsh downside early on, and then you tried rallying up, recapturing the highs, but failed, had another sell-off, sharp rally, and then you couldn't confirm and close above this previous candle here, which ultimately led to you to make a new lower low and all the way down over here. But you have had a significant bounce off of the lows, so that is good to see. Basically, the markets were down over 1%, I think a little over 1% at one point. But the S&P just closed down 0.4%, the Nasdaq down 1.14%. And I just have to flip to some of the earnings because I know we have some potential companies reporting like Coinbase. We also have Roblox, which I'll be watching, and then also our Plug, Plug. So Plug Power, look at this. We are short Plug, and what do you know? Look at this beautiful drop. Oh, it's starting to perk up now. So obviously earnings are pretty wild, but ultimately we'll just have to monitor the price action. I do think Plug has had a substantial rally off the lows into tons of resistance, and let's just see. But S&P, let's look at the daily. So I'll be watching multiple screens here on the other end. Roblox is getting a short-term sell-off. We also have Wynn Resorts reporting as well, so I'll flip to that chart on one of my other screens. And then, of course, Coinbase is the other big name. So we'll be watching all of these things as I do this daily analysis video. Ultimately, the S&P daily, you can see here, if I flip to the daily chart, we have this little bit of a parallel channel which connects this pivot down here to this pivot high to your breakout zone bar over here, and ultimately all this chop in here. It also connects this pivot down here, which I'll extend a little more. Your pivot high, and you can see how you've reversed right off of that gap fill level. So tons of resistance up here. I still think you need more consolidation or a lower move down in the event that you want to continue moving higher. But these markets are at a very big resistance level, almost hitting that 50% retrace. I do think that CPI number is going to make or break this market, but I am obviously on the side that it's going to break this market. And it'll be interesting to see this chop over here is when we also had the CPI as well as the surprise Swiss interest rate hike. So let's start to see, will inflation kind of break us again, accompanied by other negative economic data? Time will tell. Tomorrow, I think around potentially 8:30 in the morning, I think we get the CPI print. So obviously the markets will be on the lookout for what transpires there. So Roblox is having a short decline. Coinbase is steady. Wynn is up. Plug is catching a little bit of a bounce. So but nothing really to sneeze at here. Let's take a look at the QQQ. So the QQQ daily chart has had a small pullback. It was down over 1.14% today. Despite you saw Microsoft was strong and Apple just finished slightly positive. So it's very rare to see the QQQ down when the two biggest holdings, Microsoft and Apple, closed positive. So that should give you some insights to show you that there is a tremendous amount of weakness across the whole technology sector. And I think part and parcel why we're seeing the weakness is if we look at that US 10-year yield and just make a very logical assumption, this topping formation has been negated. This head and shoulders is no longer intact because you've closed above that neckline once and now twice. So with the negation of this headline, this puts into perspective a higher chance of yields moving up. Ultimately, yields are one of the number one catalysts for the technology sector as they require a lot of debt to fund projects, but yields are never good for the technology sector, and I think that's why we're starting to see the QQQ weak despite people still holding on to Microsoft and Apple. I just think once those big boys start to really falter, then you'll really start to see a decline take place in the major indices. So the US 10-year yield was up slightly on the day, just about 1%. If we look at the DXY was basically flat today, just finishing slightly negative, but really nothing transpiring over there. Let's take a look at gold. So gold finished up pretty decent on the day. It had another update, up about 0.32%. You can see you did tag the pretty much almost the top end of this resistance. There's still a little bit more to go before you're there. The big level of resistance is this 1808, or sorry, I'll readjust it. This basically this 1805 level is my massive resistance level. If gold can get through that and close and confirm above that level, then I think we will have potentially a lot more upside in gold, which will ultimately be very nice for our Newmont mining and our GLD as well as our SLV. Let's take a look at silver. Silver's pretty much very similar price action to gold. It did have a little bit of a rest pause day today, which makes sense because you had this massive power move. Now the beautiful thing on silver is that you are closing inside of this bullish resistance zone. So this is the resistance over here, and this is your support. So that is extremely bullish in silver, the fact that you're still holding support, but you're just consolidating under resistance. It also happens to be this down sloping trend line. So a big area for silver to really make or break as well. If we can get through that, then silver can really test this 2230 level, which will be a pretty impressive move on silver. Let's take a look at oil. Nothing really to report on oil. Oil finished basically slightly flat to positive on the day. You're still holding technical support here. I do think eventually you break that, but I think we still have to see that float up. And I'm kind of hoping that oil does float up a little bit more, because then we'll get another secondary, or actually it's probably like a fourth or fifth time picking up the SCO and profiting on all of those energy trades. I think the energy sector has been one of the most profitable trades for us this year as we keep growing our investment accounts. And I mean, just with today's price action, it was pretty incredible. I mean, we still closed a couple winners today. I issued a day trade, which everyone should have caught. The day trade was this VTNR. So VTNR, Vertex Energy, had this nasty gap down, drop down. I issued the alert saying it was a high risk day trade opportunity in and around the range of 750 to 775. So even if you bought the low end of the range at 750, you would have been able to make money on this pop here. And I don't really guide you in terms of how you position yourself on the day trade, but my average was around 733, and I actually rinsed and repeated this a couple times during the day because I issued the alert somewhere down over here as the VTNR was gapping down and really seeing that substantial sell-off. But very easy day trade. I mean, it was a pretty mega move when you factor in where basically I bought in at 733 or averaged down until there and sold around the 778 level for over 6% gain on a day trade. That is impressive. So very, very profitable day there. We also managed to cover our Shopify. So Shopify, we were shorting. We covered that short. We have a lot of short exposure. I wanted to get rid of a little bit of short exposure. So you can see that Shopify had a nasty gap down, big sell bar down, and we basically netted close to 10% on that trade. So congratulations. We are also shorting a couple new plays. So CVS we're shorting. One of the reasons I'm shorting CVS is, first of all, you're into this downsloping trend line. Whenever you hit a trend line, you're not going to break through it on the first, week, generally speaking. So, and you can see that when you did hit it, you had this nasty reversals candle, this topping tail over here. So the beautiful thing about this topping tail is now you've had a beautiful retrace, almost a full 100% retrace of that topping tail, failed to close above it, and you're still technically held by this resistance of this daily topping tail and this downsloping channel. And then to put things into even a more of a technical picture, you do have this inverse head and shoulder with your left shoulder curling here, your head over here, and your right shoulder over here. So you had this inverse head and shoulder, which is a bullish pattern. It broke, retraced back to the breakout zone, and had a pop and completed the move pretty much to a penny. So that is very, very impressive to see and to note that the bullish pattern is now complete. You're in an extended period here and you're into major, major resistance, which is enough for me to pull the short on CVS. We also picked up a few longs here. So FCX, we have traded FCX. We did profit from it, I think, a couple weeks ago. But ultimately, yeah, we had it down here at the 2604 and I sold somewhere up here, I can't recall. But FCX, one of the reasons I'm getting into this play again is because you also have this inverse head and shoulders. So you have a shoulder there, a head there, and then yet again another right shoulder. And the cool thing about this pattern is that this is your neckline. You broke out, confirmed the breakout, retraced back to the breakout zone, and now you're looking to continue that bullish pattern forward. So we were able to pick up on a 2-bar pullback right into the still bullish consolidation green bar, and I think we do have a lot of upside potential, around 10 to 15%. This is the completed measured move around the 3470-ish level, and that should coincide with this downsloping trend line. So I do think that this pattern is very, very likely to play out based off of the fact that it's still oversold. The dollar is starting to potentially consolidate bearishly to move a little bit lower, which should help the commodity plays. This is a copper play. So Freeport, I do think with inflation potentially going to be coming lower, Freeport can inevitably catch a bounce. And then we also bought CGC again. So an impressive sell yesterday. So we sold pretty much near the highs at CGC. One of the reasons why was because if you throw in that 50-day, what did I tell you in our previous video, is you generally get a sharp pullback off of the 50-day. It's generally your consolidation pullback, and that's certainly what we got. You were into this bottom zone resistance over here before you broke down, and I do think CGC has to either still move slightly lower or consolidate over here before pushing up to eventually fill this gap. And basically, we are starting a new position. Our average yesterday was around 290, so we're actually starting our average lower than what we started. I'm willing to take this up to 5% of our portfolio, so in the event that it does go lower, we have plenty of maneuverability room once again in CGC. But beautiful sell yesterday, and it pulled back 12.5% today. So that's an incredible job. And the fact that if we didn't sell, we would have been out of the money on the trade. Just think about that. So impressive, just being nimble, watching the charts, analyzing the charts, understanding where resistance levels is, key moving averages, and how to profit when the indices are in extended state. So let's continue to bank these charts. That's pretty much all I'm going to discuss today. I am watching in the after hours. Plug's kind of still flat on the session. It's having a slight rally. Roblox is getting hit. OMG. Roblox is nasty, nasty sell-off. So let's just flip to the 8 hours. Look at that sell-off. And I was so close to shorting Roblox. I may go for an after hours day trade here, depending, but after hours is so risky, so I might just leave it. Coinbase is slightly negative in the after hours. Plug is kind of positive, so but it's starting to fade and wane. But look at this nasty sell-off. I mean, we're talking about a So far, Plug or Roblox is down 16% and dropping like a rock. So clearly something nasty is there. And just to put into perspective, look at the resistance that we're at. So you had this beautiful surge all the way into this parallel channel. And what type of pattern is this? This is still a mega bearish pattern. Your long bear flag, upsloping parallel trend lines definitely favor a move down, and that's certainly what we're getting in Roblox. So I was very close, but I just didn't want Roblox to pop up on us by another 5 to 10%. I was willing to short Roblox if it popped up to these wicks here on 53, but obviously we're kind of missing the party here with beautiful short gains coming in. So Plug is actually turning negative now, so lots of whipsaw price action on Plug. So it's really interesting to see how volatile these price action is on Plug. If you look at the daily chart on Plug, it is closing below our level. So beautiful add at yesterday's high, pretty much at the 26.35 level, brought our average in significantly, and with today's decline, sharp decline, finishing down on the day 3.7%, we're already in the money. So just like that, by adding and dollar cost averaging at key levels, leaving our self maneuverability puts us in the money in one fell swoop trading day. And we'll see how this earning plays out. You know, I'm in the camp that if they struggle, we could really see Plug start to fall a lot lower. So let's continue to monitor the charts. Big numbers tomorrow coming out. We are still net short the market. I do think the markets still have time to consolidate and potentially move higher, but I do think the overall picture these markets will break down and start that next down leg sooner than most people think. I mean, the signals that the credit and bond markets are giving, I think it's only a matter of time before the liquidity is once again starting to be sucked out of the market. So congrats on the profits. Please give this video a big like down below and stay tuned for more technical and fundamental analysis by yours truly here at Trade